Welcome back, friends. So there has been a lot of chatter and lot of talk around President Donald Trump about to fire the Fed chairman, Jeremy Powell. Now, if that was to happen, then there could be a revolt in the global stock markets, including a possible collapse in the dollar and the US bonds. If you look at the events over the next 2 weeks, you have the August 1 deadline for the tariffs, and you also have Trump threatening at firing Jeremy Powell. If President Donald Trump were to take the unprecedented step of removing Fed Chair Jeremy Powell from the helm of the central bank, as the president has suggested he could do, then the US dollar index, which measures the dollar's strength against 6 major foreign currencies, could get a beating. On Wednesday morning, when the president did hint at possibly removing Jay Powell, you saw that the US dollar index dropped as much as 0.8% in the morning. And later on Wednesday, Trump told reporters at the White House that it is unlikely that he would fire Powell, pushing back on the media reports. So the Fed's independence is a cornerstone of the US financial markets, and the perceptions of an erosion of that independence could spark a sharp sell-off in the dollar and the US government bonds that could have lasting damage for America's markets and its economy, along with its international reputation and its credit rating as well. US markets have been volatile this year as Trump has ramped up on his criticisms of Jeremy Powell time and again, demanding that a central bank lower the interest rates. He feels that Jeremy Powell is costing the US economy $1 trillion in additional interest costs. But Wall Street has maintained that the likelihood of the president actually moving to oust the Fed chair remains low due to legal uncertainties and awareness of officials like Treasury Secretary Scott Bessent that markets would respect the move. Trump wants lower interest rates. He thinks that ousting Jay Powell will make a difference, but most market analysts think that it would send a wrong signal that a Fed has lost its independence. The Fed's independence is paramount. Financial markets favor independent central banks. That's across the world, not just the United States, which can focus on the twin objects of balancing inflation and growth, and the labor market without concerns of political interference. Ideally, politicians in any country would like the interest rates to be lower. If the interest rates are lower, then the costs of production, of manufacturing, of services is lower. Costs are lower, then the margins are higher, economy is better, stock markets are also higher. But that is said it very simplistically. The reality is that any central bank has to balance the twin objectives of growth and inflation. So financial markets favor independent central banks that can focus on inflation and the labor market without concerns of political interference. Investors perceive the United States as a great place to invest just because of the nation's strong institutions and the rule of law. A breakdown in the perception of Fed independence is the equivalent of enormous reputational damage that could be almost impossible to repair. Markets in recent days have not been pricing in the possibility of Powell's removal, so be careful. So far it looks what I should call a taco trade, but should that tariffs come to stay on August 1, or this argument about removing Powell, if not on the grounds that he is not reducing interest rates, then on the grounds that he's not doing some good things, and the $2.5 billion renovation at the US Federal Reserve is probably unwarranted. Whatever may be the ground, may not leave a good taste in the investor's mouth. And it leaves scope for a severe reaction in the markets if Trump catches investors off guard and goes forward with a legally contentious move to assert control over the Fed may be harmful. The removal of Powell is one of the largest underpriced event risks for the markets at this point of time. It could also be a black swan event. It is stating the obvious that investors would likely interpret such an event as a direct affront to Fed independence, putting the central bank under extreme institutional duress. With the Fed sitting at the pinnacle of the global dollar monetary system, it is also stating the obvious that the consequences would reverberate for beyond the United States economy and its borders. So one would expect the dollar could drop 3 to 4% in something like 24 hours if this were to happen. If Powell were to be fired, which is an enormous move in currency markets, the empirical and the academic evidence on the impact of a toss of a central bank independence loss is fairly clear. In extreme cases, both the currency and the bond market can collapse as the inflation expectations move higher, the real yields drop, and the broader risk premium increases on the back of the institutional erosion. Traders expect a 24% chance that Trump will remove Powell this year. That is bets on poly market. That is what it is being indicated. This is the highest percentage since the bet was created at the end of last year. An assault on the Fed's independence could also cause a flight from American assets. The US dollar's strength and premier status could be jeopardized if investors lose the perception that the Fed is independent, according to many who are working on Wall Street. An independent Fed is a key foundation of the dollar's reserve currency appeal. Maybe they may start looking at other currencies as a reserve currency. Markets hold a currency as reserve when they have long-term expectations that the inflation will be under control and the bond market will work smoothly. In the case of the dollar, this is fundamentally guaranteed by the Fed being independent from politics. So should the markets interpret any changes at the helm of the Fed as a loss of that independence, the incentive to hold dollars will be diminished dramatically. So all in all, over the next 2 weeks, we have many event risks at stake. We have the possibility of, although the president has denied it, possibility he may come back and talk once again about firing Jeremy Powell. And there's also the August 1 impact event risk of many countries not being able to conclude their tariff agreements with the United States. All this can, and third factor, this is also the summer holiday season. So trading is going to be very light. Should any of these event risks happen, or more than one were to happen, then because of the light trading, the impact will be even greater. To get to know more for the US markets, do join our Prime Plus Telegram group, where we give you predictions of the daily, weekly and monthly movements in the US markets. For the Indian markets, you can join Premium Plus, where you get 10 to 12 days predictions of the Indian markets, plus some good multi-bagger recommendations. Plus, I personally call and will tell you where the markets are headed, so you can have two conversations in a month with me. To get to know all this, do WhatsApp us for the Indian markets, 982-086-1044. For the US markets, 732-732-2720. Have a great investing rest of the week. Take care. Bye-bye.